There we go. Somebody said I was muted. Okay, great. Can you hear me now? Great. Can you see me? All right. Can you see the presentation? Okay. All right. Sounds good. Um, again, thanks for attending the webinar. What I said while I was muted is that this is the first time I've opened up GoToWebinar in a while, and I see that everything's totally changed in terms of the screens and the layout. And I didn't have any time to do any kind of training or practice. So if something goes a little bit awry, please let me know. And I'm going to be bouncing around a little bit more than usual until I get used to this. So I'm going to close the question panel. Um, I am actually going to, I just see I've made a mistake there in a typo, September 31st instead of September 13th. So I'm going to start the presentation and just, I just want to make sure I'll just stop and do one more technical check. So in my screen, I see the presentation, but I don't see anything else. Can you see in this situation, can you see me and the presentation? I have to get out of the presentation to toggle. Okay, I got some thumbs up. That's good enough for me. So I'm going to toggle back to the presentation, put it in presentation mode, and get started. Oh, actually, before I do that, let me go back uh, and let me, well, I won't go back. I'll just go to the presentation. You might be looking at an older version of GoToWebinar. I don't know. But the handouts are loaded. The screen may not look like this anymore. So, if you can get to the handout, copy of the presentation, go ahead and download it. If by some chance you can't find it, or if you are not looking at this webinar live, but a recording and you want a copy of the presentation, I'll be glad to send you one. And there's also a question pane, which again may look different. Please put your questions in there. While we're doing the polling questions, I might look, well, while you're doing the polling question, I will be looking at the questions and maybe try to answer them during the polling question time. If not, I'll spend a little time at the end with questions. If you are a certified public accountant in the United States and would like to receive 1 hour of continuing education credit for watching this webinar, uh, the rules are you have to answer 3 of the polling questions. There's actually going to be 4. You have to answer at least 3 of them. You need to be logged into the event for at least 50 minutes, and you must attend the live event. And um, at the end, I'll remind you again, if you would like a CPE certificate, please send me an email and I'll get that out to you in a few days. So that takes care of all the administrative and the technical parts of this presentation. Now we will look at the learning objectives. So at the end of this webinar, you will be able to explain why a lean management accounting system is necessary in lean companies. You'll be able to understand the reasons why a lean management accounting system helps drive improvement in both operational and financial performance. You'll be able to explain the principles of a lean management accounting system. And finally, you will understand how box scores are integrated into lean operating practices and business decision making. So, getting started, I want to spend a little bit of time on lean and the lean management accounting system, the relationships between these two parts of a lean company, and really review why is a lean management accounting system excuse me, important in lean companies. Lean can be explained many ways. And there's lots of good books that go into a great deal of depth about what lean is and what lean isn't. There's lots of good speakers. There's lots of information out there about what lean is and what lean is not. And obviously, I could do a whole webinar just on lean, but don't want to do that. So what I wanted to do was first explain lean in a rather simple, basic way so that it's easy to relate a lean management accounting system to a lean system. So a lean system is really made up of four components or subsystems. One is a daily lean management system, which is designed to control processes and create stability in those processes. There's also a continuous improvement system, and that's using the plan, do, check, adjust methodology to drive continuous improvement in processes. There's also a management system, this idea of value stream organization, identification, and management, how lean companies use teams, other practices like manager standard work, and overall respect for people. And finally, there's the planning system. Sometimes this is also known as Hoshin, Hoshin Kanri, strategy deployment. And this is where lean companies, work out strategic improvement initiatives to achieve annual leaps in improvement. So the lean system in total and each of these subsystems to be specific, all require relevant and reliable information. It also needs to be understandable and useful in a lean environment, and specifically in daily lean management, continuous improvement planning. And the information must also support the management system, meaning value streams, teams using the information, and overall respect for people in terms of, and this is really true a lot in the accounting function, accounting not working beneath their skills. So you have the lean system. And in general, trying to summarize a lot of what I've learned over the years, you can come up with specific goals of a lean strategy. There's three broad goals, basically: serve customers better, improve process performance, respect for people. But if you you can break these big goals down into smaller goals, which basically look more at performance. For example, delivery, improving on-time delivery, both of products and services to your customers, but also inside the business in terms of delivering to downstream processes. Quality, striving for perfect quality. And lead times, reducing lead times. So if you focus on goals like improving delivery, improving quality, reducing lead times, that results in serving customers better, many times by creating a competitive advantage. terms of improving process performance, in specifically in manufacturing, improving material flow, improving the flow time, having the material flow through the business faster, productivity of your processes, improving the productivity. You eliminate waste, you create capacity, you can get more out with your existing resources. And cost. Lean is a method to reduce costs over time. It's not short-term cost cutting, it's different. But you want to measure the impact that lean has on costs. And then respect for people, a safe work environment, preventing incidents, and morale, respect for people. So if you think about these 8 goals that drive these like strategic objectives of serving customers better, improving process performance, and respect for people, each of these goals needs to be measured. And these goals help define what relevant and reliable information a lean management accounting system needs to provide. Continuous improvement foundation, it's one of the systems of the lean system, is based on the plan, do, check, adjust process. It's also known as lean problem solving. For those of you who are not familiar with this, plan, do, check, adjust is just the scientific method as applied to business processes. It's a very disciplined methodology. And if you're trying to improve something, you must be able to measure the problem or the opportunity. You want to know the extent of the problem. For example, you could say in a value stream, we have a quality problem, okay? Or you can say, we have a defect rate of 40%. Now you've quantified the problem. All problems need a number. They need to be quantified. And when you're doing improvement, you have to set a target. What's the measurable goal? So if we currently have a 40% defect rate, we want to achieve a 20% defect rate in 3 months through a series of improvement events. So now you have numbers, okay? You plan you do your root cause analysis, you plan the event, you execute it, and then when you're checking the results of the event, you need to be able to measure the results. So using this quality example, if we conducted 3 improvement events over 3 months, what is the new defect rate? Is it 20%? That was our target. Is it maybe 30%? Maybe we didn't get down to 20%, but we still made improvement. Maybe we even did better. But the only way you understand the impact of solving a problem is through measuring. And then after you complete the event, you sustain it with standard work, or you adjust the action plan, rerun, do another event. So continuous improvement, any continuous improvement event is based on measures. And the lean management accounting system must provide the relevant and reliable measures. I often like to say lean is about moving continuous improvement is really about moving numbers. It's about moving numbers, the right numbers in the right direction. And that makes continuous improvement and all the details behind PDCA very easier. It's easier to understand. A lean management accounting system really has a goal that is no different than any management accounting system. It's about improving the quality of decision making. In fact, the the Chartered Global Management Accounting Organization, which really focuses on the management accounting systems. Um, you know, I have some material that they produced. They called it Global Management Accounting Principles. It's not like 5 principles. It's about 15 pages. But one of their principles or one of the objectives is what they call decision usefulness. That the information in a management accounting system needs to be useful in making decisions. And it has to be relevant and reliable. So if you think about a lean company, the information that's used in analysis and decision making needs to be relevant to lean thinking and lean operating practices. And it also needs to be based on actual lean operating practices. It needs some foundational issues, the economics of lean. How does lean work financially? And also the foundation of all lean thinking, the principles, practices, and tools. Now, this is the basis for a transformation to a lean management accounting system. For example, in many manufacturing companies, the management accounting system is based around standard costing. And it's probably been that way for years in the manufacturing company. And so when a manufacturing company commits to a lean strategy, that information may no longer be relevant and reliable to make good decisions. Some people say lean changes everything. And I believe that is true in a company, and that includes the management accounting system. All right, so we're going to do the first polling question. And because we're in the new format, I have to get out of here. I have to go back and I have to launch the first poll. And you have, about, 30, 40 seconds to complete. I'm going to look to see if there's any questions. All right. All righty. Most people have answered. All right, I'm going to end the poll. I've got to close the poll and now go back to my PowerPoint presentation and put it in presentation mode. So this is where we ended up. Polling question number 1. Now let's talk about the principles of a lean management accounting system. Lean management accounting is really no different than lean. It's based on principles, practices, and tools. And when you're going through a lean transformation, there's a lot of emphasis on the principles. The reason that is because the lean practices and tools in terms of how they're deployed inside any specific company, the application of the practices and tools can differ a little bit. But if you follow the principles, the practices and tools will work. And so lean management accounting really works the same way. Every company's management accounting system is unique. It's created by the company for the company. Now, yes, there's some common practices probably across different types of industries in terms of management accounting, but it's not like there's only one way to put in a management accounting system. And so that's why it's very, very important in a lean management accounting transformation to start with some basic principles, because the actual application of the practices and tools, and I can speak about this from experience, the application in specific companies can be somewhat different. So let's look at how the lean principles really drive lean management accounting principles. They're really the same, but it's more about what they really mean in terms of lean management accounting. So you think about principle number one, customer value. Okay, in lean, that's about understanding what your company's customers want and delivering that exact value when they want it. In lean management accounting, value to the management accounting systems customers, which are the users, internal people, it's about relevant and reliable information that they can use to analyze a lean company and make good business decisions in a lean company. The second principle of lean is value streams. And from a lean management accounting viewpoint, the information in the system needs to be aligned with value streams. Why is that? Because lean companies basically manage by value stream. In terms of flow and pull, what this means in lean management accounting is to flow the exact information that users need at their pull when they need it. It's not a push system. We don't want to give them information they don't need, and we want to give them information in a timely manner. And what this really gets to is for accounting and finance people to think outside of the monthly reporting cycle. There are different cycles of reporting and managing in a lean company. Continuous improvement. We want to improve analysis and decision making, and that is a continual process, which also means that trying to improve the lean management accounting system always goes on. As lean evolves, you want the lean management accounting system to evolve. And this is very much in contrast to most conventional or traditional management accounting systems in which, we've been doing it this way for 50 years. And finally, empowering employees. This is delivering the information to users and decision makers so they can learn the true relationships between lean operating performance and financial performance. You can also look at some basic, you can almost take these strategies, take these principles and turn them into strategies in terms of, relevant and reliable information to meet customer needs. Value is a strategy. Flow and pull. The right information at the right place to the right people at the right time. The management accounting system needs to recognize this. Improving analysis and decision making in terms of quality, and the idea of continuous improvement of the management accounting system. We talked about plan, do, check, adjust, and lean problem solving. One of the sort of objectives of a lean management accounting system is to help people better understand the links between financial performance, operating performance, and capacity performance, cause and effect. Okay. And these relationships are very, very dynamic. They're not static. And the relationships I want to say they're not like linear. Okay, you really have to understand, and they can change over time. They can change depending on the analysis you're doing. You also want to eliminate waste in a management accounting system. You want to stop producing what I call defective information, that information that's not useful to users. You want to stop reports that are not used by users. You want users not to have to wait on information. So whenever they need the information, it needs to be the most accurate, up-to-date information. Many traditional management accounting systems really lead accounting and finance people to spending a whole lot of time on spreadsheets. Where we want to get accounting and finance in a lean company is to use those analytical skills that they have in helping teams better understand these relationships between lean operating performance and financial performance. We want to eliminate unnecessary handoffs of information between systems. One thing I mentioned, you have, like, for example, your ERP system, and accounting takes a lot of information out of that, puts it in spreadsheets, and sometimes multiple spreadsheets. And I'm not saying eliminate all handoffs, but you really have to take a look at what's necessary and what's unnecessary. Batch processing of information. We want to get out of that like monthly cycle of reporting out of a management accounting system and report information based on when the users need it. We want to eliminate all the unnecessary human motion, whether it's meetings to understand complex standard costing information or tracking information down. And we want to eliminate all the excess processing of transactions, reporting, and analysis. So that gets us to attendance check polling question number 2, which I will launch right now. All right, I'll give you about 10, 15 more seconds to respond. All right, I will end the poll and I'll go back to the presentation. So let's now move on to the tools. And from an online dictionary, I put in the definition of what a tool is. Okay. And in lean management accounting, the tools are really the numbers. Okay. The particular function is analysis and decision making. So I want to just do a quick review of the tools, then we'll talk about practices. The first tool, lean performance measurements. We talked about the basic 8 goals of a lean strategy. There are also 3 basic management cycles in a lean company. You sort of have a monthly cycle, which is more strategic in nature. You have a weekly cycle of value stream management and daily lean management. So the idea is to create relevant and reliable measures in each of these areas. And you can see that, they're basically coming up. And what you find, let me just make these go a little bit faster. Relevant and reliable is to each level. They need to be able to use the lean performance measures to understand operating performance, to understand problems and issues. And so the idea of the linkage chart is to be able to link them together. And if you look from right to left, so you can see, for example, just using schedule attainment as an example, that measure links to on-time delivery, lead time, and productivity of the value streams. And then that links to delivery, productivity, and lead times for the company. And that leads to the lean goals of delivery, lead time, and flow. So with the right performance measurements in place, on whether it's a daily basis or a weekly basis or a monthly basis, each area of the company is focusing on measuring their ability to try to achieve these goals. The other primary tool is a lean accounting box score. And earlier I talked about understanding the links between operating performance, financial performance, and capacity performance. And this is what a box score does. It's typically deployed at the value stream level. So you have lean performance measurements to measure operating performance in terms of achieving those 8 lean goals. You want to look at financial performance. What I like to explain to people about lean management accounting is that value streams are the profit centers of the business in a lean company. It's not business units, it's not anything artificially created in terms of managing the business. It's value streams. So we want to look at value stream profitability. What is the actual revenue of the value stream? What are the actual costs? What's the actual financial performance? We also want to measure capacity. How much time is being spent on productive activities? How much that create value? How much time is spent on non-productive activities? These are the wasteful activities. And how much time is being created due to continuous improvement? So now we have the numbers to understand these relationships. Now, I'm not going to go into any more detail on box scores. I have some recorded webinars on each of the components of a box score if you'd ever like to watch them. And you can register to see the webinars on the website. The PDCA process, which I talked about earlier, it's also a tool. It's a process, but it's a tool. It is a tool to follow. It's the methodology to follow when analyzing a box score and trying to make a decision. And the tool drives the thinking. What do I mean by that? You have the numbers of the box score. The thinking, how you want your people to think, and the box score helps drive this, is the lean relationships. Operating performance, capacity performance, financial performance. The behavior, PDCA, and what I mean by that is about solving problems. Any analysis that you're trying to do is trying to solve a problem. It can be trying to, grow sales, the profitability of a customer order. Okay, it's an opportunity, but it's still a problem to solve because you want to understand in any decision, are we better off if we make this decision? are we better off? And better off means improving economic value. And what I mean by that is just think about the box score. If you improve financial performance, that's good. If you improve capacity performance, that's also good. If you improve financial performance, yes, it's good. But any of those are good decisions because in the long run, that's what you want to do. Now, this is sort of different than short-term financial thinking, which is very prevalent in companies, meaning we make a decision and we want to see the financial results immediately or in the next month. Sometimes that's to do things like drive stock price up. Maybe it's about performance bonuses. But lean companies, they take the long view, and they know that if they improve operating performance, if they improve capacity performance, they will improve financial performance in the long run. So that leads us to the third polling question. I'm starting to get used to this. So I will launch the poll. I'm going to look to see if anybody has any questions. I don't see any questions. Okay, I'm going to end the poll and get back to the presentation. We have about 20 minutes left in the presentation. Again, if you have questions, please drop them into the question panel and I'll take a look at them and maybe answer some of those at the end. So we looked at principles, we looked at tools, now we look at practices. And I gave you some definitions of practices. What I've learned over the years is that it's practicing using the box score in analysis and decision making is the key to success with a lean management accounting system. And I'm not going to go into any details, but box scores can be used in just about every business decision in some form or fashion. And even not just with finance people or with lean operating people, but box scores can be used in sales and marketing to evaluate sales opportunities. They can be used in product development to understand the impact of new products. You can create box scores for the accounting function, for administrative functions also. Box scores can be used in service businesses. So the idea is, you got to create the numbers, but then you got to start using the numbers. Now, how do you do this? And this is where you get into sort of the transformation process. So let's go back to the lean system. We talked about 4 basic components. In daily lean management, you want to deploy daily lean performance measurements, which are going to be used in stability and control. In the continuous improvement system, you want to use your weekly lean performance measurements and your box scores in all your continuous improvement activities. In terms of decision making, okay, the management of decisions, you want to do box score analysis. That's the required tool to do an analysis. And in the planning system, in strategy deployment, you want to use all of those lean performance measurements that are on the linkage chart, and possibly even use monthly box scores to understand what future states look like as you get into planning at the value stream level. So let's look at these in a little bit more detail. Daily lean management. This is just a layout of a visual board. The purpose of daily lean management is stability and control. And so how often the frequency of the measurements really is about how often do we need to measure to understand stability and understand variability and make adjustments. So in this case, this example, you have three measures: schedule attainment, defects, scrap and rework, and average changeover time. Now, schedule attainment and scrap and rework, you can see on the left, that is being measured day by the hour. Why is that? Because this particular cell, they need to be able to react very fast to if they don't hit the plan or if there are defects in rework. In other cases, it could just be measurements for the day. So the daily lean performance measurements get used in daily lean management to understand, are we achieving our standards of performance or not? And if there are gaps, what are the root causes? When you get into continuous improvement, whether it's one event, doing value stream mapping, or the cumulative impact of a few events, you can calculate the improvements in performance. So in this case, you see improvements in quality, reduction reduction in material flow, days of inventory, and improvement in on-time delivery. You can also use the box score to determine the immediate direct financial impact of any improvement event. And in this example, material cost goes down because there's less scrap and there's less inventory. You can also see the improvements in capacity. Most continuous improvement events create capacity, and you can measure that. And now you have information about the improvement event, and then this information can also be used later on in decision making in terms of how do we use this capacity. In terms of strategy deployment, what you see here is a sample X matrix at a company level. For those of you who are not familiar with an X matrix, it's a simple way to summarize a company's strategy and current year initiatives and measures. Lean management accounting is integrated into strategy deployment on the performance measurement side. The measures that you use in an X matrix should be the measurements from the performance measurement linkage chart. So at the company level, you're using those strategic monthly measures. At the value stream level, you're using the value stream measures. And if you take X matrices all the way down to the cell level, you're going to use the cell measures. Also, many X matrices, there's some cost benefit, financial or operational improvement. And there you want to focus on the economics of lean. So, what's the box score impact? Not necessarily all financial. It could be improvement in performance. It could be improvement in capacity. So that's how lean management accounting fits into strategy deployment. We talked about the decision-making system and improving the quality of decision-making. How box scores help is they drive 6 basic questions that need to be asked in any decision. And that's about looking through the box score. What's the impact on operational performance? What's the impact on capacity? What's the impact on sales? What's the impact on variable costs and margin, contribution margin? What's the impact on fixed costs? What's the impact on profitability and cash? So the numbers of the box score drive that you have to consider this. Now, I'm not saying that every single decision is going to impact every part of the box score. That's obviously not true in all cases. But it makes people think, and it drives common thinking rather than sort of functional type thinking. So here's a quick example about value stream mapping and continuous improvement events. We have a current state box score. We have some planned improvements. And you can see in yellow the actual impact of those planned improvements. We're creating 20% capacity because we are improving delivery, improving quality, reducing days of inventory, reducing lead times. So we're saving actual material cost because quality is getting better and inventory is going down. We have some other miscellaneous costs that also are reduced. And then you can, in terms of making decisions, you can say, what can we do with that 20% capacity? So in this case, we can transfer people to another value stream. And you can see in that column the actual changes to the box score. You can introduce new products, keep the people, but introduce new products. What happens there? You can see the financial improvement and the operational improvement and the capacity improvement. Another alternative, in-source operations that had previously been outsourced. And again, you can see the improvement. So the idea of a decision, sometimes there's options, and you can run different box score scenarios based on those options. So now it's time for our last polling question. See if there's any questions. Jorge, you asked, will I share a link for the recording of the webinar? Yes, I will. You will get an email later today through GoToWebinar, which will have a link to the recording. There's a couple other questions that I'll focus on getting to at the end, but I want to do a quick wrap up. So don't forget, complete the survey. You will be directed to a survey as soon as this webinar ends. And if you want continuing education credit as a certified public accountant, send me an email. And if you just want a certificate of attendance, even if you're not a certified public accountant, I'll be glad to send you one. Just send me an email. So a management accounting system is really, it connects, it's sort of like the connective tissue between a company's strategy and a company's operating model. And it plays a vital role in the running of the company. And what many people don't realize is, most people who are doing analysis and making decisions, you're part of the management accounting system. It's not something that is just sits in accounting. Accounting is sort of like the stewards of the system, but you have many users. So if a company develops, commits to a lean strategy and all the different lean practices and tools, the management accounting system must transform into a lean management accounting system. We talked about, I'm going to put all these up. We talked about the lean goals, strategic goals earlier. And the same basic broad goals apply to lean management accounting. And so when you're beginning this lean management accounting transformation, you really need to have a serious company-wide discussion, or at least with the leaders, about what are we trying to get out of this lean management accounting that we're doing, but actually you're building and transforming to. Serving customers better, improving delivery of information, timely and available information to users when they need it, improving the quality of the information, which we've talked about throughout the webinar. In terms of creating value and serving customers better, accounting and finance needs to become engaged with lean in analysis and decision making. That doesn't mean you need to become lean experts, but you need to be engaged in it. In terms of improving process performance of a management accounting system, you want information flow to be aligned with lean operating cycles. You want to eliminate all the wasteful practices and all the wasteful information that exists in your current management accounting system. You want to reduce the cost of the system, mostly in time and money. Okay? And I would say it's more time than money. How much time is spent on all the wasteful practices? In terms of respect for people, you create a no blame environment. Okay? The results of operating performance are because of the process, not the people. Morale and decision making. You want to eliminate the mind numbing work that goes on in many traditional management accounting systems. Through the common use of box scores throughout the analysis and decision making, lean management accounting really connects the company, because you have different parts of the organization that are basically using the same information. So they have to start thinking the same way. And finally, which I've talked about throughout this webinar, improving the quality of decision making. Lean management accounting is designed to provide relevant and reliable information to all decision makers inside a lean company to make better quality decisions. So that wraps up the presentation. And before I get to some questions, I want to talk about a few things that are coming up in the world of BMA and lean accounting. First of all, and I've been working on this most of the summer, I'm finishing up creating two certification courses. One is on lean management accounting. One is on lean accounting process improvement. So, the general details, these are going to be self-paced online courses. Okay. You become certified by completing a 10-question multiple choice quiz at the end of each class. And then you get certified, not for every class, but just for lean management accounting or lean accounting process improvement. If you are a certified public accountant, you can also ask for continuing education certificates. The pricing is going to be set individually. If your first certification is $400, your second certification would be $300, which means if you do lean management accounting first, it's $400. Then you decide to do at any point in time lean accounting process improvement, it's $300. And then there'll be group company pricing, 5 or more people from the same company, and you can see the prices there. My goal is by the end of the month to have the web page up. The web page is under development. The classes for lean management accounting have been completed. I'm working on the lean accounting process improvement classes. Those will be finished probably in early October. So if you're on the mailing list, you'll get more information about these certification courses. And then don't forget about our remaining webinars this year in October, November, and December. There's the links to register. I urge register now because that way it gets on your calendar. And if by some chance you can't attend the webinar live, you will automatically get a recording of the webinar. So I'm going to see if we have any questions. So I've got a couple of questions about the certification courses. Each of the certification courses take about 1 hour from there. Well, a little bit longer. Let's say there's about 15 minutes of prep time if you want to download the presentation. The actual course is about an hour. And then the 10-question quiz, I don't know, it might take you get 60 minutes to complete it, but most can be completed in 15 to 20 minutes. And so it's self-paced. You can decide when you take the courses. You don't have to take all 5 in 5 consecutive hours. You can take them, over a longer period of time. And the $400 is for all 5 classes. So if you want a lean management accounting certification, you pay $400, you take the 5 classes. It's not $400 per class. And let's see. Brian asked, can slides be shared with team members? Yes, of course. You can share the slides and the recording with anybody else you want. And I think that takes care of, wait, there's one more question. Lean is a mindset. Do I have any suggestions on how to foster this way of thinking in a financial organization where people are busy doing things the old way? How do you switch from a fixed mindset to a lean management accounting mindset? What's really important there is you have to teach people problem solving and how lean works in terms of problem solving. And you really need a lot of coaching because accounting people are busy. So you have to sort of teach them how to solve some simple problems and see the benefits. And once accounting and finance people see the benefits of continuous improvement, then they start learning, okay? And again, I said this earlier, lean is about moving numbers. It's about measurement. So the other thing you have to do is introduce measurements. Because you can talk about continuous improvement, PDCA, you can talk about all that to finance people. But if you explain to them numbers and measurements, then it will open up their minds to making improvement. So that wraps up things. I went over by a minute or two. So I'd like to thank you for attending. You'll be receiving a recording of the video in a few hours, And if any of you have questions, please feel free to contact me at your convenience. Hold on one second. All right. So I'm going to close this webinar and see you online in October.